Hello everyone, welcome to my YouTube channel How to Trade. Today we are going to discuss the strategy in currency trading. Disclaimer: this is video is only for education purpose. Kindly discuss with your financial advisor for any financial lesson. Let's go into the video. First, let me explain the strategy. Enter every day evening at 4:30 p.m. In the share market of currency pair trading. Currency trading actually takes place from 9 a.m. in the morning to the 5 p.m. in the evening. You can place a order whenever from 9 a.m. in the morning to the 5 p.m. in the evening. Today we are gonna get into the strategy of sell today and buy tomorrow's type of strategy. For that, we are entering every day in the evening of 4:30 p.m. and exiting next day at 9 a.m. For this strategy, we have to sell one lot of OTM CE option and one lot of OTM P option in the current week expiry option. This is applicable only to the day when the expiry is not that day. When the expiry is on that day, the market will close on expiry will close at the 12:30 p.m. on expiry day. So on the day we have to enter only at 4:30 p.m. of the next week expiry day. I'll explain that in the video. The margin for one lot of selling C and P is around 3000 approximately. Check with your broker for exact margin. And we are going to set the stop loss of 30% for each leg. Once the stop loss is hit, we have to open the new position. At that time, we will open the position with selling the OTM1 option. As I said, the exit strategy at 9 a.m. the next day. Let me show how to create the strategy in Tradetron. We will use Tradetron to create the strategy. Go to Tradetron website. I have already signed into my Tradetron account. Go to strategy section and click create. Okay, we have to name the strategy as USD INR currency sell today buy tomorrow strategy. As I have already explained the strategy type, let's get into the how to create the conditions for executing a strategy. First, we have to set the entry condition. In the set number 1, in the entry condition, click add. Here we have to enter every day at 4:30 p.m. in the evening. So type time, select CDS section because the currency is trading in only CDS exchange. The time should be equal to 4:30. In Tradetron, the time is indicated in 24 hours format. So we'll enter as 14, 16, 30. We have to add another condition. Since the on expiry day, the option contract will mature at 12:30 p.m. We are entering only at 4:30 p.m. in the evening. We have to enter in the next week expiry option. So on the expiry day, we have to enter at 4:30. So the condition should be today is not equal to expiry day. Today in the CDS exchange is not equal to current week expiry. So basically this is what implies that if today is the expiry day or current week expiry of that particular exchange or option, we should we should not enter the current week option. We should enter only in the next week expiry option. And if today is not the expiry day, we can enter at the current week expiry option. So we are checking if time should be equal to 16:30, that is 4:30 p.m. in the evening, and today is not equal to the current week expiry. Select here the underlying as USD INR pair. This is the current here select as 0, click OK. So this is the condition, click submit. Okay, now we have added the entry condition for our strategy. We have to add the position details. If the entry condition is satisfied, we have to take the position, for which we have to mention the type of position we are going to enter. Click cell, select the exchange as CDS, type as call option. The underlying is USD INR pair. For the strike, click FX. This FX is generally the formula bar which help us to select the strike which we want to trade. Type ATM and click OK. So basically we are want to enter into the sell the call option of OTM1. So for OTM1, select USD INR pair as the underlying and click +1. This which implies we are going to select the option which is at the money +1, which is OTM1. Click submit and close. Here select the lot as 1 and click add. We have already placed the position of C option of USD INR pair in the current week expiry. Now we are going to select the P option. For selecting P option, follow the same procedure. Select underlying as USD INR pair. Product is normal. Strike, click FX. Go to the FX. Click ATM. Select the underlying as USD INR. ATM -1 in which is that is the OTM1 for put option, that is P option. Click select quantity as slots and mention 1. Click add, then close position. This is the first step of creating a strategy. You put the entry condition and you put the position which you are going to take once the entry conditions are satisfied. Click here to create the strategy. Once click the strategy is now created. We have to select. We have finished the one step. The next step is set stop loss for 30% each leg. To place the stop loss, you have to place the repair one condition. Click here to add the repair one condition. Repair one condition is we have to exit the leg once the price of that leg, that is price of the call option or put option, is exceeds 30% of the entry price. For example, if you have sell the option price at 100 rupees, if it increase to 130, which is a 30% of 100, then we have to exit that position. To exit that position, create the condition as leg exit condition. Select this condition we have to select the condition type as entry. This is normally indicates that the which option or which position has to be exited. That is the main agenda for selecting this condition. We are going to exit the call option which we have entered in the first time. That has to be exited once the price of that call option exceeds the 30% of the entry price. To select, click here as entry, select the underlying as USD INR pair. In set number 1, condition number 1, leg number 1, select stop loss percent and click change the value to 30%. Click submit. We have created a condition for stop loss of 30%. Once the condition is created, we have to exit that position by simply clicking here and paste exit. This is how once the price of the position exceeds 30% of the entry value, this condition get triggered and the this option will get into buy. Once this position is executed or the stop loss hit, we have to open another leg in the same CE option uh, of OTM1, which implies if you have bought 82, the ATM of the USD INR is 82 rupees, the OTM1 will be for call option is 82.25. So when the call option exists 30% of the 30% of the entry price, at that time the ATM may be around 82.25. So we have to buy OTM1 at that time. So click the condition. This condition should be once the stop loss gate is triggered and the call option is bought, we have to enter the sell position. Click the traded instrument, click the repair once. Since it's a repair once in the first condition, click USD INR as pair. Set number 1 is 1, condition number is 1 is 1, leg number is 1. So basically this what implies is once this a condition is executed and this position is taken, we have to sell a put option call option of OTM1. Click call, underlying USD INR, click FX and click ATM. Choose the underlying as USD INR pair and click +1 and click submit. Select the quantity as lot, click 1 and click add condition and click close. So once this condition is satisfied, uh, once this leg is executed, these legs will be triggered and this position will be taken. We have to add a stop loss of 30% to this leg also, for which we can copy this condition and we can paste. To enable the paste option, we have to first update the position, update the strategy, so that the paste condition will be enabled. Here, see here, the paste condition is enabled. We have to copy the leg exist condition. We have to paste it in here. The stop loss has to be placed for this position which is traded in the S1 R2. Set number 1, repair once in R2. So edit this condition, click here, change this to repair 1, set 1 and condition number as R2. Stop loss percent is 30% same. Click OK and click submit. Once this condition is triggered, we have to exit this position and paste exit. That's it. We have created the stop loss. Wait a minute, it's not getting exit. Paste exit is not enabled. Click here to copy, click here to paste exit. Okay, the condition has been pasted. So we have created a condition for this call option alone. Now we have to prepare for this sell option also. The same procedure has to be followed. Click add condition. You can copy this position, copy that condition and paste here, and change that to entry condition of USD INR in set number 1, condition number 1, and leg number as 2. Click OK and then click submit. To exit that position, click this button and paste exit. So this condition implies once the entry price of the put option selling exceed the 30% of the entry price, this condition will be triggered and the selling put option will be closed here. So once this position is closed, we have to enter the another position. To enter the another position, copy the trader instrument keyword and paste here. So we have to basically enter this trigger this condition once this condition is satisfied. So S1 R4, click here, go to S1 repair once S1 R4. So once this condition is satisfied, we have to sell another call option, another put option of OTM1. You can also copy this position. So since it also mentioned the OTM1 of the put option, we can paste it here. You should have note that here the OTM1 will be different since because this stop loss got triggered. That means the ATM1 of that time has been moved. So here the ATM price will be another one. So ATM minus one step ahead is OTM1, which is that person is taken here. We have to add the stop loss condition for that. To add a stop loss condition, copy this condition and paste here. We have to place a stop loss for this R5 condition. Click here, edit, click here, click change to repair once and change to R5. Click OK, then click submit. Once this R5 condition is satisfied, we can exit this position. Paste exit, paste exit condition, paste exit. So once we have created the condition for both call option and put option for the trade. Now we have to place the exit condition. To place the exit condition, click here to add a new set and click here. In that position, to sell today and buy tomorrow, we have to add two conditions. First condition is today is not today of CDS exchange should not be equal to the entry date of that position. So USD INR. This basically implies that we have entered today and the position should be closed or the strategy should be exit in the next day, that is tomorrow. And add again another condition as time should be equal to 9:10 in the morning. Click CDS, click OK. Time should be equal to, click number 9:10 in the morning. Click submit. So we have created a strategy that enters every day at 4:30 p.m. We place the selling of one lot of OTM call option and 1 lot of put option of current week expiry option. We have placed the stop loss for each leg as 30%. Once the stop loss is hit, if any one of the leg, it has to be open another position. At the new OTM one, we have to exit the strategy at 9:10 am. This whole condition we have placed only for the day which is not equal to the expiry day. For example, if today is the expiry day, the expiry of that option will exit on 12:30 p.m. The option contract will be expired. So at the 4:30 p.m. you cannot trade the today's expiry option. So you have to trade at the next week expiry option. How we can trade? Add an another set which is the same as this set. Add another set which is same as the, but you have to select the position everything on the next week expiry option. Let me see how we can do it. Just simply copy everything and paste one by one. We click here and paste the entry condition. Change that to today should be equal to the expiry day, which implies that if today is equal to expiry day, if today is the expiry day, then we have to take the next week position. The condition, it should enter in this condition only. Click submit, copy both the position one by one. Click C copy and paste here. Click P copy and paste here. You have to change, this is in the current week expiry, you have to change it to the next week expiry. So for changing into next week expiry, click here, select FX, click FX. In the condition tool, we have to select current week expiry plus 1. Choose the underlying as USD INR pair and the expiry as 1. This implies that it means it is equal to the next week expiry. Click submit, then close. Click update, then close. Change the put option also. Click current week, change to FX. Click FX, change to current week expiry. Underline as USD INR pair. Click here, click OK, click submit, then close. Update the person, then close. Again we have to add everything that we have did in the set 1 condition. We have to add the stop loss of 30% to the each one of these call option and put option, and again we have to enter the new position with the same OTM one next week expiry, and again we have to add the 30% stop loss for that leg also. For that we can easily do as copy everything that we did in the set 1, that copy S1R1, click here, paste, change that condition to set number 2. Click submit, copy this one and paste exit. S2R1 is completed, and then copy R2 and place it in the R2. We have to enter new position, then copy here and paste. You have to change the condition as set 2. Click submit. Again we have to copy S3 and place S3. We have to exit this position, so paste exit. Now we have to add the S4 condition on the set 2, copy the S4 condition in the set 1 and paste in the S4 condition of set 2. Edit this condition, change the set number to 2 and click OK and click submit and close. We have to exit this put option that we have entered in the set 2 and paste exit. Add another condition, go to S5, what S4 is already done. You have to call the copy the S5, copy this S5, paste here, edit and change it to set 2, click submit. We have to enter the position same as we have entered in the entry condition, that is the OTM 1 of that time. Click add. We have to copy S6 condition, sorry, R6 condition. Copy this and paste here. Edit this condition to condition number set number 2. Click OK and click submit. Exit this condition, paste exit. Then we have to add the exit condition, copy the exit condition and paste in the section. The condition should be same. Today is not equal to the entry date, time should be 9:10. Click submit, click OK. There is no need to be a universe exit because we have separately mentioned the exit condition for each set. Let's go into the advanced setting. The condition can be same. We have to reactivate after every 6 hours. We should check the condition immediately. Check continuously. Nothing else you can say. You can update this condition. Close. You can deploy this condition. Since I have already deployed my strategy, it shows like this. Once you deploy this strategy, you can deploy it in the market. For sell, deploy it in the live market. For selling one lot of PE option, one lot put option, it gives around 3000. You can sell up to 50 lots. It around it will be around 1.5 lakhs. This may give approximately rupees 500 rupees approximately as a profit on every day. It depends. Sometimes it may give some higher profit or some different profit, but it does not show so much movement in the market, since it's a very USD INR pair will move in very little volatility. The profit amount will be very less, around 500 or 200 250 rupees or 750 rupees per 50 lots you trade. It will be a passive income, and it will be some consistent income which we can rely on that without any huge risk. That's it. This is a strategy condition and a strategy model. You can create on your own. Thank you for watching.